Somebody was asking me, Steph, why are you always talking about 401ks? Why are you always talking about IRAs and investing for the future? And I tell them that that's precisely it. You have to have long-term planning and not short-term thinking. So with the three things for you to consider about why I keep mentioning 401ks or IRAs and putting in, it's because it's tax sheltered. If you're buying and selling in a regular taxable account, it becomes just that, taxable. Taxable today. Capital gains tax, certainly lower than ordinary income tax. But at the end of the day, when you have tax sheltered, long-term planning versus short-term thinking, and then you have investment diversification all wrapped in one. You can have large companies, small companies. You can have USA, you can have Europe, Asia, Africa, South America, bonds, fixed income. You can have it diversified. How much of each one you have depends on your risk. But that's the difference. Tax benefits today versus tomorrow. That's the Roth versus the traditional. The traditional, you get that deferred income today that lets you build and grow. It's taxable tomorrow. The Roth side, you put that money in, you get no taxable deduction today, but you let that build and grow, and it's tax-free in the future. So, okay, so long-term planning, taxes today, tax-free tax, no tax money in the future. But just remember the 401k in the year 2025, you can put in up to $23,000 if you're under the age of 50. If you're over 50 or 50 plus, you can add another 7,500. So that's 30K you can be putting in, whether you deduct that from your income today or you put that into a Roth and it's tax free tomorrow. Either way, that's 30K you can put in a 401k. With the Roth 401k, remember I told you a long time ago, income doesn't matter. In a Roth IRA, it does. If you want to put money in, if you make over $150,000, if you're a single individual, if you make over $236,000, if you're married, filing jointly, then you can't directly put into a Roth. If you put into a traditional, there's no income limit. However, it might not be tax deductible. These are parts of the conversations that I want to sit down and have with you, but you got to reach out and holler at your boy. I got more coming for you. Just go ahead and let me know what you need from me, and I'm going to keep talking.